few months ago, private health insurance was described as being in a death spiral, but COVID-19 has provided the industry with an unexpected financial boost. Non-urgent elective surgery was cancelled for a month, and other services such as dentists and physios were limited. But all the while, fund members continued to pay premiums. Tracy Bowden reports on the push for people to get some of their money back.
I think it's a bit unfair. I think it's a bit of an outrage. We've been paying for services that we haven't been getting.
Andrew Wynd is a physiotherapist. COVID-19 restrictions have seen his income drop dramatically.
When this all started, we had some mass cancellations within days. In the first couple of weeks, we went down 60% of our normal turnover.
With many medical services unavailable due to the pandemic lockdown, he began to question the value of his private health insurance.
We started cancelling everything we could that were deemed non-essential, and private health insurance, where previously I would absolutely see it as an essential and a valuable addition, we absolutely looked at dropping that.
He's been encouraging clients to do the same, despite the potential impact on his physiotherapy practice.
It's a risk, but all we can focus on is making sure we continue to offer value to our clients, and I think we can do that without the private health insurance rebate. Personally, I think they should either refund those the last month or at least offer a discount to their members.
People have been paying car insurance through COVID-19 and not driving as much as well. So, I very much regard COVID-19 for all its misery as a temporary impact on our business.
At the moment, it's clear the industry is making a lot of money for providing not very much for.
After the government cancelled non-urgent elective surgery for a month and COVID-19 social distancing affected services such as dentists and optometrists, private health funds continued to receive premiums. Former industry regulator Sean Gath has done the sums.
A month's worth of premium revenue is worth about $2 billion, and you'd be not too far off the mark assuming they probably pocketed about $1 billion that they wouldn't otherwise expect to have got. Well, clearly it should be returned to the contributors because people are paying for something and they're not getting the value.
Funds have deferred a proposed premium increase of almost 3% for at least 6 months and have offered premium relief to some members. But customers say that's not enough.
It's your dad's birthday on Friday, Spot. That's a big cake. I started to realise, well, hang on, I can't see my dentist. The place I go to for a remedial massage is not open. So what's Bupa doing for people like me who want to keep their insurance but don't think they should be paying for their extras while they can't access them? You find the bar of chocolate? Yes.
Erin Sequeira didn't want to cancel or suspend her policy. She wanted to pay less. It took a month of phone calls, emails, and finally a social media post to get an answer.
Finally, they said they could offer me 6 weeks of free coverage, which I took and I'm thrilled with. I guess it's just frustrating that you have to really fight and be persistent before you can get Bupa to offer you something that's appropriate in these circumstances.
In a statement, Bupa told 7:30 it's helping customers with the greatest financial need first, and this may have delayed the response to Erin.
Although we do anticipate there will be significant savings as a result of people not being able to access surgery and dental care, for example, the savings are thus far modest.
NIB Managing Director Mark Fitzgibbon disputes the claims of money for nothing and says it's too soon to guarantee compensation.
But there has been loss of cover, but my main point is, Tracy, that once the dust is settled and the savings associated with the COVID-19 impact are clear, only then can we make those kind of judgments. It'd be irresponsible and prudentially unsound for us to start, compensating people with, say, cash rebates or any other form of financial remedy until we're clear about the actual financial impact on the business.
While restrictions on elective surgery are being eased and some therapies and treatments are resuming, it will be some time before all health services return to normal.
The private health insurance industry was already one that delivered questionable value to some consumers, and that's been laid bare even more so during this crisis.
The consumer group Choice is urging private health insurance members to take action.
Choice has told people to do three things if they're struggling to manage their household budget. The first is to review whether you need extras insurance. The second is to ask for hardship. So if you are really struggling, you can ask for premiums to be waived or deferred for a period. And finally, you should review your hospital cover and consider downgrading or dropping it.
I think it's a little irresponsible. The COVID-19 crisis will pass, and people will still have the same underlying needs for healthcare treatment, and health insurance, of course, is an important mechanism for enabling that.
Funds say they'll consider offering rebates when their financial position becomes clearer. Some argue that decision shouldn't rest solely with the insurers.
And I think the government is going to have to step in and have a pretty close independent look at all these numbers and try and assist a resolution which is going to be appropriate for everybody concerned.
Well, there's no need for regulatory intervention here. We'll do the right thing by our consumers, as any other company should do.
The private health insurers need to do more if they want to maintain their membership. Surely they've been profiting in the last couple of months at a time when a lot of other people are suffering.